Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda will be like most others. We'll do the market update. I'll go through the earnings trades, see how those are turning out so far. And then Joe's going to go through some charts and maybe some earnings stuff. So that's the agenda. Let's get started. Overall, pretty much same snapshot as last week. You had SPX and State 1, Russell and 8. So quite a divergent indicators there telling us, I told you it's pretty much like force of nature. We get up around 50. So we did cross 50. We're at 51 right now for the pie, up 8% from last week. It's just been a slow grind higher so far, but still right in our ranges we've been talking about for a long time. So we'll go through each of the indices and let's look at market pulse first here. So as you can see, this is overall bullish bearish states. So we got down like 18 and a lot of these we get pretty quick movement up. As you can see, the slope of this line, it's going 25, 27. This one's been a lot slower. I mean, it's just been grinding like 1-2% type deal, but it has crossed. So really what we want to look for is when they cross, is it going to get a big push up like this, or we going to get some kind of like back here where it just levels off and turns over. So really just want to watch to see, okay, is it leveling out, or are we continuing the current trend of just like a slow grind higher? But there's lots of instances where that 50 cross has been right near the top. It's not kind of like here, the market's just kind of booming. So that's just something to look for. Okay, are the states still kind of following this like slow grind, 1-2% maybe, and look for top-ish behavior, where the increases have stalled. Really, that's what you kind of want to look for. But it can continue slow grind higher. We got room in our ranges right now for it to continue, but we'll have to wait and see. But we did make the 50, so new highs, new lows. Nothing really going on there. This moving average is kind of going back and forth. So market's really trying to find direction, right? We cross and it's just kind of been back and forth, right? Even pretty much par for the course. We're right in the middle of the training range, at least for Russell. The SPX were a little higher towards the top end of that range, but this is pretty much telling me market's trying to find direction, which way it's going to break out of this trading range, when it eventually does that. So let's look at states. So we're not oversold, we're not overbought, we're just in the middle at this point as far as our indicators. Let's see. It's been slow grind. Eight's dropping down. We're getting a little pickups in sevens, and then fives really haven't. So what we look for is these sevens to pick up pretty strong. They're not very strong, kind of gradually, and then the sevens going to fives, fives to ones. So not a huge pickup in sevens like I would have. I mean, if you look here, we're at 2% at the bottom here at March, about a month ago. And most of the gains have really come from the eights. So those twos, pretty much going back into ones. So the strong stocks, pop back into one. and that's kind of a lot of the gains there overall. So it's not a very, you know, market with a lot of breadth, I guess is how to classify that. So, if we get some follow on, these, sevens, fives start picking up and crossing overs, you're going to run out of the state twos real quick here. We're down to 5%, most of those, from 20, so that's 15-point gain. This is pretty much like a 15-point gain. So those twos, so we only got 5% more in the twos really. So we need more follow through, and that would come from sevens and fives, which aren't showing a lot of strength. I mean, back here you can see sevens is really ramp up. Back here, sorry, there's a lot of lines. Sevens really ramp up here, from 7 to 30. So here we were, let's see, at the bottom, 3%, and just kind of grinding a little higher, 10% higher. So not a lot, but something to keep an eye on. So it's just not, all that's telling me there's not a lot of breadth in this move. And the winners are the strong stocks that that have been in ones and twos have pretty much been leading this charge. So, and the lower end isn't really helping out. Okay, I think that was it on here. Let's go to SPX.
Hey, Josh.
Yep.
Question on the market pulse. How could we look at this in regards to trading? As far as I mean, we do our trades because of the history, but as far as maybe swing trading or day trading, I mean, what is the pulse? How do we use it in association with our trades?
Yeah, so I think the big thing, so like last week, I was like, okay, we're going to grind higher, right? So that should be how you're, we're going to cross 50, right? At this point, I was like, it's almost like momentum. We're going to grind higher, right? So there's your, you position your trades like that. That's really, kind of the whole premise of this, just kind of getting a decent gauge of market direction and which way the momentum is going, right? So we've been grinding higher for a couple of weeks here, with the eventual crossover to 50. So now we're over 50, and it's harder to say, what to see if we get followed through from the sevens and fives. But I think that the trade the past 2 weeks have been just grind higher, right? So now it's a little more up in the air. So I wouldn't, I'm not 100% confident this is going to keep, grinding higher. So that's how I think a lot of people use it. They're looking, it's a green pie getting higher, that's day over day, or, is it the opposite, right? That's kind of your indications like, okay, have we topped out on the bullish? Then at that point you would expect it to grind lower, right? So it's just really, that's just, I mean, you just look back, it's just, waves. And okay, now we're it's acting like a top here, or we're a ridiculous number up here at 92%. You can wait till it gets into this range, and then it's almost momentum where almost all the time, back here it didn't, but it got real close to 50-50. But once it turned over, it pretty much gets close to that 50-50, and that's a good trading opportunity. And they come every, as you can see, it's almost like once a month. It's kind of doing that, right?
Is there a way of like narrowing it down? Yeah, if it's like general wise, but with thousands of stocks or sectors to choose from, it's just trying to hone into what one may think to say, okay, this is the sector or this is the state that we should be looking at to, concentrate in.
Well, I mean, we do have the sectors up here. So this is actually, we've redone this and it will be rolled out soon. So instead of these weird aerospace things, we're going to have all the spider sectors. So like XLK, you'll be able to pull up the market pulse on all those individual sectors. We'll also have S&P 500, the Russell 2000. We don't have all 2000, but I think we got like, almost, between 13 and 1400 symbols of the Russell. Not all those are optionable. They got like penny stocks in there and stuff, but if you want to, go down to the sector level, you can go down to the sector level, look at bullish, bearish, look at the same thing, and the same kind of analysis we're doing here, right? You can do there if you want to look for specific sectors. So,
Okay.
Okay. Good question. Okay, SPX state one, just grinding higher. So, for us to get, our current range is 42 to 38. So we're getting close to the top of that range. You can see the high in this state is 4170, so about 30 points off. So that'll be a lot of, resistance, getting above that. So target 2 is above 4200. So that's what I'd be watching to the top. If it gets up there, is that going to be real strong resistance like it has in the past? So, but it's doing, kind of the typical move. So the resistance is obviously below that target level, which is typical, because that 4200 is down here. So I would, if it does continue up, I'd expect that resistance before the target. So, but that's the range that we've been in. I don't see anything really telling me, we're going to get out of this range in the short term. But I've been wrong before, but that's kind of how I see this right now. Let's look at the big chart. So here's, S&P 500 longer term. Oh, whoops, sorry. That messed up my ranges. There we go. Okay. Annotate. So that's our 4200 there. And then, the low end is at 38. So the low is broke more. You only had one real break here back in August above for a few days, maybe a week. So, that's really what I'd be looking for. If we continue to grind higher, this number is going to be, pretty strong resistance. And we're not seeing a lot of follow through with market breadth. That's really the kind of big thing. Tell me it's not. I don't feel like it's going to keep grinding higher for much longer. But, we're getting near that level and we're not seeing a lot of breadth. But, it could be wrong. We could get a lot of positive earnings stuff, but, right now I'm not seeing that. Let's go Russell. So still in 8. Good old Russell. So, the high in here was 1813. We're close to that, right around 1800, which is the middle of our range. It's, 17 to 19. So this is smack dab in the middle. Obviously S&P is pretty close to the top of that range. I think I said last week, if we can get above this like 1813 and hold kind of in this stop loss range, we could flip it to 7. Just pretty much been in 24 trading days, so that's over a month, and the average is 28. Hasn't done the average move, obviously. Pretty much a couple percent, so I hadn't even hit that first target. So kind of chopping sideways. I think this is why we have like an S&P 500 in state 1, because it's shown on the market pulse, those 1s and 2s. Those 2s go back into 1. A lot of those are going to be in the S&P 500, where the market breadth, the Russell, you know, we're not seeing a lot of those transitions from, you know, 8 to 7 and 7 to 5. So I think that's why this one stalled a lot versus S&P 500 with, you know, bigger, stronger names in it. So we can grind higher. Yeah, we could possibly pop out of 7, but you know, right in the middle of the range. So I expect this to stay in the range, short, medium term, unless we get some kind of big news. So right in the middle, range bound, continue for the Russell. Okay, yeah, we've had some decent move on the 10 years. I mean, this thing's volatility. Yeah, we never looked at this in the past, but you know, we got down to like 3.2 something, right around 3.25. Pop way back up. So that 3.5 is kind of like the magnet, you know, back and forth. And that's about approximate range, 3.5 right in there. Yeah, seems like it when it drops down below, it'll pop back above. So you know, I think, you know, what the Fed's doing, I think, yeah, we'll pull that up real quick. Fed is, so you can see the month ago is 50% no cut. You know, we're at 475. So right now we're at 80%. So that's what, 2 weeks out. So the third, so pretty much, you know, anytime it's over 80, it's pretty much locked in. You know, we still get some time, and but looks like, you know, we're getting that quarter hike. Not sure we really need it. I will show you a chart I saw. Yeah, we've had problems with the banks. This is for personal interest payments, so people with loans. I think a lot of this is credit cards, but you could see, you know, these big kind of run-ups, and then these are recessions, obviously. But I mean, the run up here is pretty ridiculous. This is you know, current, it's pretty much exponential since, you know, the Feds started going. So think of this kind of like the bank balance sheets, you know, where they have all this junk holdings, and, you know, like the value of those are pretty much going like this, whereas, you know, the interest payments are going up. So yeah, it's a good time to get to get you know, bonds, like, you know, credit, you know, buy it. You know, get decent rates, especially short term. I mean, that's probably a good, you know, place to hide. You know, if you're worried about recession, obviously lots of recession talk, and you know, this is another kind of chart showing you. I mean, you can see like you have peaks here and stuff, but you know, how long is this between? You know, you have peak here, you know, peak a little before, then it starts to turn down. So we haven't seen a peak yet, but it's just another kind of worrisome chart that, you know, has me, you know, somewhat bearish long term on the market. So want to pull that one up. Order rate pretty much in the books. And then our balance sheet. So this is thanks to those banks that failed, had a huge spike up, and, you know, they've continued what they've been saying. They're grinding lower, you know, running stuff off, but obviously, oh yeah, this big spike. So and, you know, I think their goal is get them to contracting, like we've shown, you know, and this is the best way to do it. And, you know, they keep raising rates to, you know, slow down the economy. So hopefully they don't break something. Obviously had a few things break, but nothing nothing that huge. They rescued Credit Suisse, that would have been a huge one. But yeah, they keep raising. I don't know. after this one, let's look at June. So June right now, they're pretty much right in the middle of no rate hike in June. So we'll see. You know, I saw a chart the other day. Someone was saying, you know, if once they have the unemployment rate over the, is higher than the inflation rate, then they'll stop raising. First, I've heard of that, but um, our unemployment rate's pretty low. So, but it's just an idea. Someone somewhat made sense, but I don't think, honestly, think they could have stopped a while back. No, definitely don't need this. This is almost like an intentional, we're just going to keep going until they break something. That's what it feels like to me. So, all right, that was it. Market update. So, open up to any other questions?
This is Dave. I always got a comment, or not so much a question. Actually, I comment on the previous question. Your S&P question that came in, like how do we trade it, whatever. So I guess let me respond to that for a second. Well, if we're looking at the S&P and if you happen to be of the opinion, I agree with Josh, as a matter of fact, that we're going to probably be in a grinding higher mode until we're not, and you have to make a guess on how long that might last, right? So Delphian gives us some tools for that, though, right? There's some average days in a trend, right, that shows up in the S&P chart. So 40-some days out, and we're maybe 4 or 8 days in. And if you're still of the opinion that we're liable to be grinding higher for the rest of the average trend, you pick the strategy to trade that, right? You could buy a vertical call spread or sell a vertical put spread, and there's you use other say other pieces of information to pick whether if you're of that opinion, well, I'm gonna sell a put spread or buy a call spread. Well, if the premiums are high, that may favor the decision to sell the call spread instead of buying the put spread. If the premiums are cheap, implied volatility is low, it may be more beneficial to buy the call spread. So you choose the strategy based upon the things that you know about, right? You have to make an opinion on what the bias is going to be for a period of time. That doesn't change ever. And we get told if you're interested in a particular ETF or industry group or I want to say the spider that might if it correlates to the S&P 500, then you can use the S&P 500 as the proxy for the opinion on where you think your bias is. So I don't know. We have to make our own opinions on what that is. What is the thing? What is whatever we're looking at trading correlate to, and do we have proxies for it that are right there in front of our face on Delphian to help us look at that? I think it provides a lot of good information, but it doesn't choose for you. I guess that's the point. Is we have to make our own minds up whether things are going to keep grinding higher or not. We're right in the middle of earnings season, right? I think next week, third week, is usually when most different sectors in the S&P, most different sectors, period, have some chance of reporting. And the NASDAQ is the bigger one for next week. So at the end of next week, participants that are involved in price discovery have enough information to kind of you kind of get a better feeling for where things are liable to go in the very near future after about the third week in earnings, in my opinion. This is my opinion, so everybody's theirs. So anyway, that's how I use Delphian to, help me make decisions on which way I want to trade. I don't know. I think there's a lot of good stuff here. You have to apply it though. You have to. There's no. A lot of people keep looking for a typical calculation or, let me plug these things in and it'll give me the trade. I don't think that's the way it works so much. Saying, I probably should just shut up, but that's my opinion. So thanks, Josh. I think we'll see the bias you have for at least another week. We'll see.
Yeah, thanks, Dave. Anyone else? Thanks, Dave. Hopefully that helped clarify it for you, Russ. At least one other opinion.
Sure, thank you.
Mhm. All right, any other comments, questions?
I think we're waiting with bated breath for May, what is it, 3rd?
Yeah, it's not far off.
I don't think the market does much till then.
Yeah, I would expect it to stay in that range until then, but yeah, subject to events happening. And I mean, obviously earnings drive a lot, the forward guidance on earnings. So, they could surprise us and, either way. So,
Well, like J&J reported really good earnings, pretty decent earnings, and they dropped. So Morgan Stanley reported decent earnings and they're dropping.
yeah.
So there seems to be some topping activity in the market right now, or a wait and see attitude. Maybe it has more to do with monthly option expiration too, coming up on Friday.
Right.
Seems to be just going nowhere right now.
Yeah, I agree with that. So, all right. Thanks, Sadir. Anyone else? I'll go through the earnings real quick. I didn't open up the new UI. All right. All right. Virtual portfolio. Okay. We had a non-mover. I don't know if anyone traded that. It was fine. That was like a 1-day trade fast, hit over that 20%. So that one did well, obviously. We got our first vol rise. That's a CH Greg. I think we pulled, because it's under 20, I think we're pulling that off our liquid list. But that one, you have some time. 5-1 for the vol rise. That's in there like every quarter. And it's not gonna, I don't think it usually hits the 25%, but I think it usually ekes out a little profit. Bullish runner, we had one of those that closed out real quick. That was the Delta. You can see it's 414. Yeah, it was like another 1-day, or just kind of popped after that earnings. So that one closed out. So far, so good. We had a bearish pre-runner. That's a gold miner, AEM. So that one just started. So we got earnings on the 27th. So yeah, opened up on Monday. So you got another week or so before that one. But started out okay. And then the bullish pre-runner. So we got 5 open. And 5 close. So kind of mishmash. This Avis isn't doing well so far. That time, obviously 5-1, 5-3, 427. So still got quite a bit of time on most of these. So jury's still out. As far as the closed, we had the only one that didn't hit the profit target was JP Morgan. We had talked about that last week. So it eked out a profit. All the other ones were over 25%. So it's going kind of typical so far with this slow grind higher. Those were good trades to get into at that point, and we'll see if we get follow through. And so far so good on the earnings plan. Any questions on that?
I'm trading them all. Haven't taken a loss yet.
Knock on wood there.
Yeah, I doubt if
Yeah,
there'll be 0 losses, but so far so good.
all right. Sounds good.
How are
Thanks,
you not
Sudhir.
taking a loss on car?
He hasn't closed out a loss yet. I think is what he meant.
Yeah, I haven't closed out a loss.
Okay.
For example, JP Morgan, as Josh was just saying, when it came the day to close out, it was showing a loss just like car is for most of its life. But then when the day it came to close it out, it was a small profit.
So he's got time. Time on Avis. We'll see. That one moves pretty well. So that's been a regular. But I mean, once in a while you get a loss on these. So okay. Thanks, Sudhir. Good questions, Russ. All right. Anyone else before we let Joe run here? All right. You ready, Joe?
All right, Josh, good job. Thank you. I'll grab the screen. Hi, everybody. Let's see here. Got a handful of charts pulled up. On the home page, and also I'm not in the new UI, obviously, either. One thing that catches my eye a little bit is, the bond overview. Just the fact that, we've been in bullish states for quite some time, but 4 of the 5 that we track, now it's not the highest. The next probability is for them to go to state 1. So that catches my attention. Whether that's how, the market will play out and the bond market remains to be seen, but there may be an underpinning of, lower rates moving ahead. So that's, the one thing on the homepage that kind of jumps out at me. A bunch of different charts to go through. First one, kind of to your point, Sudhir, JP Morgan, good earnings, J&J, good earnings, stocks went down. XLF, we obviously have had a lot of bank earnings and was wondering about the reaction to that. It's been a little bit muted, but we haven't sold on the good news. Basically the thing is just grinding higher in a state 8. So it's one of the 2 we've been talking about for 3+ weeks, still in state 8 along with real estate. But the thing that starts to catch my eye here also is just the fact, well, obviously the bearish state 8 has not been the right direction, but in terms of time, we're starting to bang up on time, on the average move. So, just pulling up XLF to see the reaction to those big banks. And as Josh said, just kind of grinding higher. Overview-wise, in terms of all of the sectors in the ETFs, last week we were 8 bullish, 3 bearish. This week we're 9 bullish and 2 bearish. So before we get to them, just the Russell, and really this is similar as Josh says, been a mixed bag for a better part of a month. State 8 and Russell, NASDAQ and S&P in state 1. I'm now just kind of looking at time. Obviously, this thing never got close to one of the targets. It's going the other way. We're banging up against the average time within 4 days in terms of the NASDAQ. And boy, oh boy, is this market just grinding sideways, slightly to the upside. Same thing with SPX. Well, actually, not the same thing. Let me back up. Just in terms of XLF and Russell, both of them were banging into this idea of the average length of time, coming towards its end. That's not the case, with a couple of these symbols, indexes and others, that are in state 1. Just over a week for SPX, so long way to go there. Same thing with NDX, we're 2 weeks in, but a long way to go. So, and still, ways to go with both those targets. So looking more in terms of time, than anything else in terms of those three indexes, and really anxious to see, when Russell may roll into possibly a stage 7. Getting into the sectors now, XLB, the materials is one of the ones that this week did roll into state 1. I've just kind of pulled up the charts going back to the COVID lows. Not really, a very exciting sector, but when everything's going to state 8 and state 1, I want to take a look at it, and there's the snapshot there. Talking about 35 average days, so a long way to go with about a 6% move. So we shall see. The other one that went in is the industrials. Well, and just to confirm with the materials, the XLB, I mentioned this before. There's a stock by the name of Linde, which makes up basically 19% of that ETF, and that's I guess it's the largest industrial gas company, chemical company in the world. So that's a big part of the XLB, this Linde stock. Then you get into the air products, the Sherwin-Williams, stuff like that, and they're all in the 4, 5, 6% range. In terms of the industrials, it's more evenly based in terms of the makeup. I think we mentioned before, Raytheon, UPS, Honeywell, Union Pacific, Boeing, Caterpillar, Lockheed Martin, Deere, GE, all those kinds of goodies. And again, back to the COVID lows with the chart, this thing is, getting close to significant highs. I mean, it's just kind of plodding along. It's held up well. It'll be interesting to see. And maybe over the next couple of weeks, this is one to watch, see what the earnings releases are for these big companies, and see if we get, if we get a push up. The fact that it's, now in state 1 and just kicked in with a month ago might suggest that. I think it's an important one to watch, the XLI. So, what else? Just XLC was talking about last week that had rolled into 1. Here it is from COVID, just kind of making its way back. Certainly, it got crushed a lot more than many of these others, so more room to move to the upside. And like the whole market just kind of going sideways for the last week. The other one last week that had rolled into state 1, I think from state 5, was the XLP, and again just sideways. You can see, but kind of interesting. Some of these are getting to their highs. So the fact that they're in state 1, I think these 4 kind of bear watching for sure. Just Dave, one of your favorites, the old VIX. I mean, we had a lot of volatility with the bank situation in mid-March, but boy, oh boy, the VIX is just falling out of bed. So
that's what a slow grind will do for you.
that's for sure. But and I don't really have any insights in terms of the option volume is still absolutely at historic levels. The industry's doing about 45 million contracts a day. I think I read a stat recently, there's a lot of this short-term, one-day option stuff. I think it's 15% of the option volume. There's some stories out there about whether that's impacting, the VIX. I haven't done enough reading to have an informed opinion about that, but it's a level here that we haven't seen in an awful long time. So I just thought I'd pull that up. From a time perspective, it's typically 3 weeks. We've gotten to the average move, and then some. A lot of occurrences with VIX and state 8. So, we'll see. I just thought I'd pull it up because it's so low more than anything. I pulled up the dollar chart. I think, might have been Lee. You were talking about the dollar last week. I mean, it's, and again, this goes back to the COVID lows, on the left-hand side. Kind of range bound. It is in state 8. What does state 8 say? You get 45 occurrences, and target 1 was met, but kind of like the market's just kind of hanging around from a time perspective. Obviously, we still got a couple weeks, but nothing significant there in my mind in terms of dire moves of the dollar. Here's one I just wanted to pull up before we're done. We don't talk too often about individual stocks. So Tesla, has had obviously a monster run coming out of the end of the year, from basically 100 got up to, I think, a little over 200 and it's trading about 180 now. So I just thought I'd talk about that briefly. Their earnings are tonight. That's, why I figured it might be fun to talk about a little bit. The one estimate that I saw was they're looking for 75 cents a share. That's down from 95 cents a share this quarter a year ago. Earnings overall, I think they're looking for around 2.6 billion, down from 3.3 billion same quarter a year ago. But revenues are expected to be up quite a bit at 23 billion. Up from 19 billion a year ago. I think everybody's heard about the cut in prices. I think they cut prices 6 times over the last number of months. So that's the Tesla price chart. And actually, we have a small internship program here. Josh and I have been trying to work with some college students, get them engaged. We went to a college conference in New York a couple of weeks back. One of the students I speak to was talking about Tesla, and I hadn't looked at the chart in a long time, and he's telling me how the stock hadn't moved in like a week and a half, and I'm like, how can that possibly be? And then I pull up the chart, and the thing is just kind of sideways, maybe, and I'm assuming waiting for earnings, but it just almost speaks to how the market has just stopped and gone sideways. When Tesla's not volatile, it's pretty interesting. In terms of volatility, I just thought, we don't pull these up either, the implied volatility chart. So that light green line represents, the Tesla's, historic volatility. It's, fairly low at this point, just above 40%. The implied volatility is the 30-day implied is that blue line, just south of 60. I was interested when I hit this up to see whether there was, even though the stock going sideways, we're going into earnings. So I was actually anticipating some kind of pop in the implied volatility in advance of the earnings. We don't have that. So I'll be interested to see, where things settle after the earnings that come out tonight. I'm going to take it a step further. The stock's currently about a $1.82 and change. So the at the money straddle that expires on Friday is trading around $13. So, if the market's right, they're looking for about a 7% move coming out of the earnings announcement tonight. And, Josh had pulled this up last week. I guess it was Caterpillar we were talking about. So, that 7% move would fall right in, the typical earnings move that we've been getting over a period of time here. Surprises, most of Tesla earnings have surprised for the last number of quarters. So it'll be interesting to see. Again, the one estimate I saw was, the one consensus estimate made up of, I think, 8 different analysts was looking for 75 cents tonight. So it'll be interesting to see. Again, that at the money straddle, the 182.50 straddles trading around $13. So it'll be interesting to see where that opens tomorrow, as well as the price of the stock. That's what I had for today. Happy to take any questions or turn it back to Josh.
Yeah, I had one question back for Josh. You were saying that in the Market Watch or Market Pulse, you were going to redo the categories.
Yeah, the drop downs.
And you're going to use the spiders, the X series or whatever.
Mm-hmm.
Normally there's 11 that are the most popular there, but they've added a few.
Yeah.
Are you going to use the ones they've added? For example, XTN is transportation.
No, just the 11 we have there. I mean, we can always add.
Okay, because they have added like XPH, which is pharmaceuticals, and XBI for biotech and all that. I'm sure. So there's more than 11 of them now. I think there's like 13, 14.
Yeah,
I didn't.
Go ahead.
I was just going to say, Josh, I didn't realize that. And as Josh said, Sudhir, we'd be happy to add them. It'd be
Yeah,
a
here's
good
what
approach.
we go
You're-
off of. This spider sector, 11 sectors. This is because they have a bunch of different ETFs, but this is the one that we go off of.
Yeah,
Yeah.
that's what everybody uses is the 11, but there's
Yeah.
for example, this neglects transportation, which is why I requested IYT. But then in competition, these guys added XTN for transportation. And then they've added XPH for pharmaceuticals, XBI for biotech. There's a couple others that I can't remember off the top of my head, but just FYI, there's more than those 11.
Yeah. Yeah. I mean, there's a ton. I mean, we can always add in maybe the transportation. I don't. I think the pharma is pretty much wrapped up in XLV. But yeah, the transportation, I know a lot of people, the IYT. I know that
Yeah,
one's
transportation is a key one. There isn't really an X series that has JB Hunt and FedEx and UPS, and Union Pacific and people like that. If you go to the holdings, you'll see what I mean.
Uber.
UPS is in there, Union Pacific, and I'd have to look at. I think when XTN tried to is matching this, so you could stay in the X series and accomplish the same thing. I think.
What is it? XT what?
XT Nancy.
Nancy. Yeah, it's not used a lot here, huh? Look at the volume. Yeah, we could always pull IYT. It's there. I don't know if this is right. They're doing like a level load. Where's the other ones? Cap weighted type thing. Like these are all equal amounts.
Yeah, maybe I know IYT's been around a lot longer. This XTN is new, so I don't or if they've bounced it up, but it would be nice to have a transportation one, at least in the when you redo the categories.
Yeah, it's a matter of all I did was went to this homepage, uploaded a stock list, and then loaded in our system. So we had almost all of them. Obviously the Russell, there's we have 13 something, but like a bunch of these, we have just upload this list. I think we had pretty much almost all of them. So yeah, that'd be useful. Yeah, I can see IYT. Yeah, that'd be a good one to add. So we can do that.
Okay.
Is it in the system, IYT?
No, it's not in the Delphian system, and it's one I watch, for transportation. And
Yeah.
It's a pretty big one.
It is. It's a popular one. Yeah. We have the data. We can. I think we're going to go through because we're missing a few from these sectors, so I think we're just going to do a system upload of symbols. For like Airbnb's not in there. Yeah, we don't have that one too. Like A, B, and B. Nope. So there's newer symbols that are popular that I think we need in there. So IYT. Yeah, we've been asking for that for a while. All right. Good idea. Thanks, Sudhir.
Hey, Josh.
Yep.
Is there an easy way to reset one of your screens or any screen? Like sometimes you go into it and you just get the loop and you can't seem to get out of it. it just sits there and you get the circle dots going around and around
Yeah,
and
the loading thing,
yes,
like this, like it'll just load.
exactly. Or, you know, you put something in there you didn't want to, or couldn't find it. It just keeps on going there and you can't do anything.
Yeah, I would just like close it and then load it. Sometimes it'll still be slow, but that's kind of what I do.
Okay, so there's not like a fast X out of something.
No, no, not, I mean, we're gonna be moving to the cloud, so we shouldn't have that problem anymore, but maybe on the back test will still, you know, we're not gonna move that to the cloud, but everything else, like clicking around here, that should all that speed problem should go away in the near future. But yeah, that's what I do. I mean, if it's loading, I'm like, you know, just close it and open it up again.
Okay.
Okay. Any other questions, comments? All right, well, we'll close it up. Thank you all for attending. Do it again next week.
Hi, everybody.
Thank
Thanks.
you, Josh. Thank you, Joe.
Thank you.